that's why centralized exchanges have been so successful so far, is that you get to basically cut a lot of these corners, or I guess you just kind of like get to not think about a lot of these problems. Like, MEV is one of them, but like, there's just like a lot of unsolved technical problems. Like, how do you coordinate these validators, like do things that still allow for a seamless trading experience, right? But I think all these can be solved. And it's also like, it's like a fun thing to solve. So I think if like smart people naturally are attracted to hard problems, and we'll solve them all. And so yeah, I would definitely bet on the global financial system being on a decentralized platform, like owned by the people.
Quick shout out to Permissionless 4 coming this summer to New York, June 24th through June 26th. We'll have speakers from all across the industry, including Hayden Adams, Kyle Samani, Guy Young, and more. Get your tickets today by following the link in today's show notes, and make sure to use code BELL10 to save 10% on your purchase. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. This is a great one. I'm joined, as always, by my trusty co-host, Monet. Monet, hello, sir. And we've also got Jeff of Hyperliquid, or do you go by El Jefe? What's the preference here, Jeff, for this podcast?
Jeff. I don't know where Jefe came from.
Not sure, but it's a nice nickname. Okay, we have got an enormous amount of ground to cover today. So we ended our last episode with Hasu and Rob Leschner, actually kind of on the subject of DEXs. And so we thought there'd be no one to better discuss the future of DEXs in general with than you. And maybe before we get into it, could you just give us a really quick, maybe 2-minute overview of the history of Hyperliquid and how you guys have gotten to this point? Because I think in the last year, you've not only dominated in terms of volumes, but the architecture and kind of the future vision of Hyperliquid as a perp DEX towards more of an L1 has changed a decent amount. So can you just kind of remind viewers, how did you start, and then how did you get to where you are today? And then we can get into some of the weeds of the architecture.
Yeah, sounds good. So I'm Jeff. I lead Hyperliquid development, and we're a super small team, mostly Americans. I myself grew up in the US, went to school at Harvard, studied math and CS, and after school went to do market making in TradFi, so at a firm called Hudson River Trading. Learned a lot about markets and thinking about them rigorously, but ultimately was pulled into crypto and wanted to build. Basically, DeFi kind of spoke to me even in 2018 when there were basically no users yet. So kind of got waylaid and ultimately ended up just doing prop trading in crypto there. And from that, we kind of were plugged into all of the markets, both CeFi and DeFi, and had a pretty big presence. And when FTX collapsed, that was kind of the sort of impetus to start thinking about what ultimately became Hyperliquid. Basically, we saw the problems with FTX firsthand and witnessed a mental shift where people kind of realized that crypto's all fun and games until something bad happens, and then you realize that the value props of crypto itself actually, ironically, are sort of antithetical to how these centralized entities are.
Jeff, can I interrupt and ask maybe a slightly heretical question? Is there anything that you think FTX did particularly well? Because I remember at the time, FTX was a beloved exchange, especially for traders, and they had a lot of good stuff to say. I'm front running a question that I wanted to ask you later, but it seems like the go-to-market for a lot of new exchanges who've been able to make a splash on the scale that Hyperliquid has is you start to kind of innovate around listing assets more quickly, right? And this is kind of everyone from Binance to, I'm not comparing Hyperliquid at all to FTX. At one point, they did okay as an exchange, right? But that's kind of an early step of go-to-market and iteration. So I'm curious from your standpoint, and it's always actually a question that I've wanted to ask someone that does understand market microstructure better than myself. Did FTX actually have good trading technology, or was it just Alameda on the back end? Like, what's your view there as a trader? And I'm curious to see what you thought they innovated on versus what was smoke and mirrors.
Yeah, it's a good question. So we actually never touched FTX at all. Like, I was always just suspicious that Alameda and then so basically you just hear all the stories. It's like they share the office, right? There's like really like same people running the two. So obviously hindsight's 2020, but I will say we never touched it. We just it was for us it was just like a red flag from the beginning. And so I can't speak to the like using the exchange, but I think they did a lot of things. Obviously, they were very successful, right? So crime doesn't help you succeed. You need something like some core product that you build, and I do think they had some things there. So like I think that they did things like they kind of studied all the other exchanges and kind of presented the data in a very easy way to their users, saying like I don't know if you guys remember there was basically a CSV that they publish every day with like volumes, and like they had some formula for like the amount of wash trading happening on this venue, and they like kind of stack ranked the exchanges. I think that was like super good, like transparency for users. And what else? I mean, their UI was I think good. It was like very clearly designed by traders, and I think that's an overlooked point, which is that like building a trading interface is actually it's like a very complex product, and you need to cater to many different users, and there's kind of like one canonical front end, especially if you're building a centralized exchange. And so there are a lot of just micro decisions on sort of balancing the needs of different people who probably want like opposing things, right? Like the pro users want like all these like bells and whistles, and like really basic users, like first time users, don't even know what they want, but if you put all the bells and whistles, they'll just be super confused. And so they obviously I think they executed that well.
Awesome. Sorry, I didn't mean to derail us there. So back to Hyperliquid, and maybe talk to us about the origins there, and then again how that evolved to.
Yeah. So going back to that, so basically with FTX's collapse, we kind of saw this need for sort of user focus, or something that users love, but also something that users can trust, and really aligned with the original ethos of DeFi. And so yeah, it kind of started as a Perps DEX. In building it out, we kind of realized that basically all the infrastructure in crypto is kind of not production ready for this specific use case of like high throughput, low latency, global exchange, even if you're just focusing on crypto, but let alone like all of finance. And so we basically never backed down from the challenge. We're just, instead of compromising, we're like, okay, let's just like drill deeper. Like, can we build the next layer of infrastructure below the one that we're currently building? And ultimately ended up at building an L1 itself. It's like, I guess for the less technical users, like a blockchain basically. So if you look at Ethereum, Solana, even Bitcoin, they're all just kind of these public ledgers where different nodes around the world can agree on some world state, and what that state is just depends, and like how it evolves also depends on the different chains. And like none of these were suitable for the sort of ultimate vision of Hyperliquid, which is to be like a trusted financial layer for all of finance to kind of be built on top of. And I guess we'll probably go into this later as well. So yeah, Hyperliquid kind of grew from just a perp DEX to financial infrastructure powering a perps DEX, but also other stuff. And then this other stuff kind of came along as we were thinking more about really moving finance on chain. Like perps is a really big part in crypto, but just having like single asset denominated derivatives, like linear derivatives, lets people express their views long short, but doesn't actually let you kind of build all the building blocks and ultimately move people's sort of financial lives onto this new and improved platform. And so part of that came with like launching spot trading, but then really like I think the last piece that took us a while to kind of arrive at and like really commit to building was the HyperEVM. And obviously like standing on the shoulders of giants here, where like Ethereum really pioneered this sort of general purpose smart contract system and all the tooling and ecosystem around it. I think it's like super cool. And that was really what ultimately led us to decide that like the EVM is the way to go. Just like there's like a lot of developer mindshare and just culture around building applications that trustlessly interface with other applications through smart contracts, and just bringing all of that expressive language and technical know-how to just like have that work on Hyperliquid. And like that was basically probably like a half year long endeavor. And the vision here was like not just to like tack on an EVM so that people could play around with it, but really it was like for us it was a super important component into how users would ultimately end up interacting with these natively built primitives like order books, perps, spot trading, etc. And just having that like fully composable link between the EVM and what the other stuff, which now is called HyperCore, was like a very tricky interface to get right. It went through like many iterations, but I think where it is now is probably not final either. It's like constantly evolving, but I think people are starting to realize the power of sort of correctly built abstractions there. And like maybe one example, just I guess this is much longer than a 2-minute intro. One recent example is the USDT launch, which was in collaboration with Layer 0. So two very big crypto protocols, and kind of like coming in and just like plugging into Hyperliquid so seamlessly because they're familiar with EVM chains, and adding it as like another EVM chain in their mesh network. And like basically they really leverage this abstraction so that they can do all the trustless bridging and minting natively on Hyperliquid without bridging risk, and then let users on HyperCore sort of directly interact with their asset in a way that they don't even need to touch, because that part is built into the protocol itself. I think that kind of like aha moment. I think there'll be many more of those as people really kind of familiarize themselves with what is going on in the ecosystem.
This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more.
I would love to hear kind of maybe if you have more thoughts on what that sort of close integration between the perp decks and the spot markets versus the EVM will have going forward. Are there any like use cases that you're super excited about from that kind of new architecture where an exchange and a L1 EVM are really intimately linked?
Yeah. There are many examples. I'm trying to decide. I think I can go into one that's like, it's a bit complex, but I think it's like really interesting. So another big component of the L1 is staking, and it's a proof of stake consensus algorithm. So users need to basically delegate their hype to one of these validators. It's permissionless to spin up a validator, so anyone can self-delegate the 10,000 hype and then basically spin up a node and broadcast like, hey, here's I'm here, and like delegate to me, and then everyone kind of proposes blocks in proportion to how much stake they have delegated. Pretty standard for proof of stake networks. What's interesting about staking on Hyperliquid is that more and more the staking kind of has a different utility for different users. And so one part you saw relatively recently was that staking now is an input into trading fees, and so it kind of aligns users and stakers, which I think is like a really just positive thing for the protocol as a whole.
Jeff, what do you mean it's an input into trading fees? As in you stake and you have lower trading fees?
Exactly. Yeah. It's no other venue does it. Like, that's something Binance has a similar thing where you need to stake a certain amount to hit a certain tier, but on Hyperliquid, it's like you can trade as much as you want, you can stake as much as you want, and those two together, like each provide their own, like, I guess, discount into the trading fee, and it's all computed on chain.
So interesting.
Yeah. And but like another even more, I would say, like cutting edge application of staking is that like HIP-3 was announced recently, and there's still a lot of community input going into it and testing and whatever on testnet. So it's not close to being live yet, but it's a very big milestone. And this is the permissionless perps, sort of like I don't know, like scaffolding, like framework, if you will. And staking is a big input to this, because with perps, unlike spot order books are very well defined, and so most exchanges actually start as spot exchanges and only later on venture into derivatives. But perps, I think, like whoever's setting the oracle and market price sort of have a lot of power to kind of like mess with the markets if they were to choose. And staking is kind of the solution here, which is that usually staking only keeps validators honest, but on Hyperliquid, staking also keeps sort of like perp deployers and like Oracle updaters. I think the Oracle updaters will mostly be like other protocols, but you still kind of need to hold them accountable. Like the protocol needs to hold the other protocol accountable. So yeah, staking is like a way where the deployer of the perp market needs to put up a massive amount of stake, and during the unbonding period of like unstaking, they could be slashed. Now this could be for various reasons. Like within consensus, the slashing is usually for malicious things such as like voting on two different blocks at the same height, just like clearly malicious, provable bad stuff. With perp deployments, I think it will be similar. It's like you spec'd out this market and you violated the spec that you put out and liquidated a bunch of users. Like clearly very bad, and there needs to be disincentive to doing that. Otherwise, no one would trade perps. And yeah, so I think going back to the original question, like how does the EVM integrate? Well, I think there'll be many perp deployers who don't want to or can't afford to put up this capital, but they can operate a really good, really interesting perp market that users want. So this perp deployer could basically create an LST, and the interesting thing here is like the LST would be on HyperEVM, composing directly with HyperCore. So like not even like a multi-sig that then just like goes and stakes, but rather like the contract itself can stake. So it can be like fully composable on chain. We can get a bunch of users to kind of stake to it. The governance of the thing can like just be the contract itself, and it can say like, okay, once we hit this threshold, we will send like the contract will permissionlessly, trustlessly execute this transaction to deploy the perp, and users can say, okay, yeah, I'm okay with that. Like, I want to put up my hype, stake it in this way, and the deployer of the protocol can actually then share, let's say, like some percentage of the fees on this perp market back to the LST constituents. And this whole thing, the key thing here is like, unlike other protocols where the LST is basically like a smart contract that then has permissions, like separate multi-sig permissions to like do stuff with the funds, it's actually like fully on chain, which I think is like super cool. And so yeah, I think that's one example basically. It's like these perps kind of like backed by their users, I think would be like one cool way in which the EVM and the HyperCore can interact.
Jeff, that's super interesting. Okay, so you know what I found myself wondering, when we're describing this, and maybe to just, again, rewind and summarize sort of the history of Hyperliquid, which is you guys kind of started as a perp dex via bridge to via Arbitrum, right? Like kind of that's originally how a bunch of the assets flowed into Hyperliquid, and now you've built your own sort of instantiation of the EVM and are a bona fide L1, right? And I'm curious when I think about what you guys are experimenting with. A lot of other protocols, especially on Ethereum, might have thought about building an L2, right? And when I look at, what like Marinade is trying to do today, or Base, they're all kind of experimenting around what changes they can make to the EVM, because that's kind of the bottleneck for throughput at this point. But they've chosen to build this in L2 with a centralized sequencer. You guys have gone in another direction and are innovating and experimenting with your own sort of souped up version of the EVM, but you also want to build as an L1. So talk to me about that design decision. Why L1 versus like an ETH L2?
Yeah, Marinade is an L1 too. So I think the examples you give, maybe like the common thread is that they're like vanilla EVM execution as opposed to sort of expanding the sort of execution logic. Would that be a fair summary of the question?
Yeah, that's a fair summary. I mean, I think this is also a challenge of the L2s in general as well, is like the backward compatibility, which is obviously that you want to kind of build on this ecosystem of developers who are used to building in the EVM, but also you want to make some changes so you can increase performance, because there are some real limitations around the EVM. So
yeah,
I'm curious.
It's a good question. I think. Yeah, there are many sides. There are many answers to this. Like one of them is a practical one, is just that like, initially the priority was just to get something that users wanted at all, and the easiest way was to not worry about an EVM. But
yeah,
I think at this point we have the luxury to kind of like zoom out a bit and say like, what is the correct thing to do, given that all of finance sort of should happen on one platform. And I think even sort of retrospectively, if we could have changed anything, I don't think I would have. I think the EVM is great. I think it's really good for, like, maybe a good analogy I think is like the EVM is to like all of finance as AMMs are to like all of trading. So it's really good to cover this like super long tail. And I think people underestimate like just how long the tail is of like things that can be done in finance. And this is where like AMMs cover super long tail liquidity, where like if there are only like 5 people in the world who want to trade some asset, like an AMM is like probably the best way to sort of coordinate that trading. So I don't think it's good or bad. It just like has its use cases. And I think if you want a platform that can house all of finance, it cannot just be built on an EVM, no matter how performant the EVM is. And then maybe like one example, which we kind of gave, we gave this example like way back, just when we were like even starting Hyperliquid, because there were a bunch of questions like, oh, why isn't it just built on an EVM? And the example is just like if you have a perp dex, and with perp dex, it's just the number one concern is risk for the system. And so Hyperliquid has, I can like write down these like, just like mathematically prove to you that like Hyperliquid is solvent. Like the perps, every perps market is solvent at every block. And of course there can be bugs in implementation, et cetera. But I mean, like theoretically there's no way for the system to have bad debt, assuming you implemented everything correctly. And but I would not be able to do this for an EVM based perp dex, because there's no execution guarantees. Like you can never with an EVM, there's always some sort of like auction system or otherwise to determine which transactions go through. Whereas on a custom execution environment, you can say, well, like when this block happens, like we need to do these things to make sure that the perp balances like kind of are all positive, or whatever condition you want, like positive within some bound or whatever. Like you can basically say like this logic needs to execute on every block, no matter what users are submitting. I think that's like super important for derivatives. So yeah, I think like long tail spot trading, no need, if it ain't broke, don't fix it. But yeah, when the ambitions are bigger, I think you kind of need to look beyond and kind of, you have to question everything and say like, is this really the best way to do things?
And very cool. All right, I want to change tacks a little bit and describe how you're thinking about handling MEV in this system. And I thought it was really interesting actually to sort of bring stake. There actually was an old paper. I'm going to blank on the name. I'll find it and include it in the show notes. Dave Oha of Osmosis actually wrote about the idea a couple of years ago about because basically what fees are, especially on an L1, is spam prevention. And so it's a really interesting idea to basically say, hey, if you're a staker, it also makes sense that you're probably a good actor in the network, and we don't need to charge you the same amount of fees, for DOS attacks. It's super interesting and innovative. One thing that we've also seen as well, and I know something that you think a lot about, is prioritizing Oracle updates in general. And so, I'm curious, when you think about this world of MEV, which has been really, really thorny, at least in environments like Ethereum, Solana as well. That's kind of one of the trade-offs in, an L1, which is truly permissionless, versus a more controlled environment like L2s. And you're starting to see, like the optimism versus arbitrum approaches differing quite a bit, but both of them are basically doing things that you could never do on the L1, right? So I'm curious how you think about the design around MEV within your ecosystem, and maybe talk a little bit about Oracle updates specifically as an area that you're focusing on.
Yeah. A lot to unpack there. Where to start?
I always ask 3 questions in one. It's a horrible habit of doing podcasts for years.
Yeah. I think MEV it's thorny, but in some sense it's like a really popular research topic, but it's like a good problem to have. It means that there's kind of like real flow going through the platform. So I will say I think like Solana kind of had a good, like people give them a lot of shit for like whatever, like not thinking about MEV, but I actually think they did a really good job of just like getting a lot of people to want to use the chain, and like let's get people to use, like let's build something users want first, and then anything else that comes up is second order. And I think MEV is kind of like one of the second order things. I'm not trivializing the problem, but I actually think it's solvable. I don't remember who. I saw some tweets recently. You can maybe add them as notes later as well. But the sort of like like multiple proposers, sort of like committing hashes, like basically like block builders committing hashes of transactions sent by multiple proposers, and then like deduplicating them and then just sorting them by priority. I think Dan Robinson also like talks a lot about sort of just priorities, kind of all you need. And I think like these ideas together kind of solve the one block MEV problem, where it's like malicious proposer can extract value. I will say, I think going to like the hyperliquid part of the question, I do think MEV is like a bit. I think it's a bit pigeonholed when you think about it as like purely within a single block. I think the problem is bigger, and the analogy here is like if you're trading, let's say you're trading on a centralized exchange, and some market making firm has a microwave from Chicago to Tokyo, and maybe not a microwave, but like a microwave and then some like underwater fibers and stuff, and can like, can basically like pick off your orders. Like, and then let's say the centralized exchange was like operating actually on a blockchain and had like 20 blocks per second. Like, you don't actually, I don't think as a trader you care whether it's like, oh, the MEV came from the block proposer seeing my transaction and reordering some taker order in front of it, or if it came from this trading firm having just like super fast connectivity and being able to pick you off. I think a market maker is basically like a user, and like that user gets screwed no matter in either case. And from their perspective, like their reaction is the same. It's to like widen their quotes, and that ultimately hurts the retail traders, right? So from my perspective, MEV is just like a subset of some broader problem, which is like toxic flow. And we think a lot about this. So Hyperliquid was like the first, I want to say definitely the first crypto thing to do this, as far as I know, and then probably the first. Okay, I mean, I'm not gonna. So I think one of the first large venues to gain traction to basically do this thing where takers are kind of treated symmetrically across the board, which is that their flow is deprioritized, and the net effect of this is, one is like less volume overall, but two is like the volume is sort of better. It's like both sides are kind of always happy, even if they, let's say you give every actor like 1 second to sort of think about whether they actually wanted to make that trade. I think like you want that percentage to be as high as possible. And I think with this change, it goes up dramatically, because otherwise a ton of your volume is like a toxic taker picking off a market maker and just ultimately like retail eating the cost. So that's an example of like how I think like MEV should be handled, which is a little bit more agnostic to the dynamics of the MEV, but more like the user perspective of like, don't get screwed by the protocol.
Jeff, this is super interesting. And for those who are a little bit less in the weeds of market microstructure, to summarize what you're saying here, I think this has always been really challenging for market makers to work on chain, right? Because if you post quotes, they become stale very quickly. And if you have very sophisticated takers, there is a relatively large market making firm who's recently moved on to Solana who is doing this, which shall remain nameless, but basically they're acting as a taker. They're picking off stale quotes from market makers, and so MMs then have to quote wider, right? So it widens out bid-ask spreads, and retail ends up paying more for their execution costs. So I've got a lot of questions for you on that. Can we rewind? And I actually want to, you started to get into something really interesting in the handling of MEV that I wanted to talk to you about. So you referenced Dan Robinson's priority is all you need. So this is relatively the approach that's being taken on Optimism. So they have something like an EIP 1559 base fee, and then they just sort transactions in order of who's paying the highest priority fee. To my understanding, that's something that's really difficult that you couldn't necessarily do on ETH L1 today, because each proposer is random, right? So you would need like a very, very fat builders right in the middle of that, or a relay system or something like that to enforce it. But even so, from my understanding, it's not super easy to try. What I heard you just describe actually is sort of and this was a question that I had for you around, your thoughts on multiple concurrent proposers and what's going on Solana, right? Because the Solana approach to multiple concurrent proposers this flies in the face of what we know about co-locating, right? Which is, hey, if we're going to build a centralized box, you want to locate as close as you can to that box in Tokyo or Frankfurt or whatever, and that's the end of it. But my understanding is the Resnick totally vision around this is that if you actually have a bunch of different proposers all over the world, then that you can actually quote or you can do blocks faster, somewhere around 20 milliseconds, I think is their idea. I just heard you unite all of those ideas, and I don't understand how you did it. So talk to me about how you can bring priority is all you need to an L1 type environment. And then if you could layer in your thoughts about multiple concurrent proposers and how viable that is as a, consensus strategy.
Yeah. So yeah, I don't want to take credit for that. I was actually just reading. I was trying to just paraphrase what I thought this paper was saying. So maybe I misread it, but I think it's like the Solana. I think the Anza folks and
Resnick and Anatolia.
Yeah. I think maybe them as well. I really should, learn the sources. But there was just this paper, and it made a lot of sense to me. So I'm actually not an MEV researcher. We kind of just think about things from first principles and build stuff, and often people later on come and like give some fancy names to something that we did, and like maybe also like someone else was thinking about the same thing in parallel, and we just like didn't know. So I might butcher some of the like sort of like technical terminology here, but basically, I don't think that I think in a world where networks are super fast, so you don't care about like additional hops and like sort of additional times of like basically between proposing and executing a block. I don't really see any downside to having multiple proposers, just kind of like, all commit transactions and then the kind of like unveil them after the, so the different builders propose transactions and there can be duplicates, and then the proposer basically bundling these, and then the builders kind of unveiling them after the fact, and maybe there's some like slashing if there's malicious stuff. Like it all seems kind of like very solvable to me, though granted I haven't thought about it too much. And yeah, I think this adds like latency because you need to listen to multiple builders as a proposer before you hit some threshold where like you're okay building the block. Otherwise, if that's not allowed, then you can just take one of them and then all the MEV is back. But yeah, I mean, other than these sort of like these what feel like constant factor latency increases, and maybe like probably increases the sort of networking overhead of the network as a whole. But again, I think these are all just like hardware just scales super well. So I feel like this should just happen. And in my mind, it feels like, then you just, once you have all these, like, once you have different sources of transactions in a single block and you just order them by priority, there's like no way for, like the game theory just completely changes, and there's like nothing you can really do to game it. That being said, I think like basically another one I point is that I think just having like really fast blocks also kind of solves the problem in two different ways. Like it makes like the amount of MEV in a block scales with the time between blocks, because like it's like imagine you just had like one block a day or something, then like ETH's price probably has moved like plus minus 10%. Then like obviously if you're the one building that block, you have like so much wiggle room to like pick people off. But if blocks are like 1 millisecond, for example, then it doesn't really matter like how dishonest can you be in a block. Like all you can do is reorder stuff, but like nothing happened in that millisecond, so like you can't really mess with it. So I think those are like the two limits you can think about, and there's like clearly a continuum there. And so in some sense, the faster you're willing to make blocks, the less of a problem there is to begin with. And then, but that's in tension with the fact that the faster you make blocks, the harder it is to do all these like fancy things of like multiple proposers, etc., or multiple people proposing inputs to give to the proposer. I don't know what that's called. So I think they're both, there's probably just like there's basically like some three-dimensional surface you're thinking about here or like three-dimensional volume of like, and the axes are like how fast blocks, or like how geographically dispersed, or like how much like network tolerance you have, and the amount of like fancy stuff you're willing to do. And like there's like a lot of pretty optimal points you can pick. So yeah, I think MEV will be a solved problem, and I think protocols really should like focus on getting users first. And I think, but on the other hand, I like really appreciate all these researchers doing this work. It's really interesting technically, and I think it's really cool to see how far the space has come since Ethereum. Which my understanding is like there was not much thought given to MEV at all, just like when Ethereum was built, because they had so much shit to figure out. And so it's really cool. I think both are super important. I think probably prediction would be like in the next few years, people look back and say like, oh, it's funny that we thought this would like kill crypto, but it's just like, just one of those technical challenges.
Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes.
I guess one follow-up from like hearing about like multiple concurrent proposers and just the challenges of like maybe trying to reduce latency as much as you can. In a sense, it feels like it might never be possible to match the sort of like speed of a centralized exchange. That's just everything's kind of sitting in one company's server, and I think in a way that's like kind of who Hyperliquid is really competing against right now. It's kind of more of like a small fish in a very big pond with all of the sexes. So I'd be curious, like kind of how you view Hyperliquid's edge against some of these other centralized players, where maybe you'll never be able to compete just on pure speed, but kind of what else is going to make the trading experience on Hyperliquid competitive, or maybe even much better than you could get on a centralized exchange, despite being a little bit slower in a way.
Yeah, I think the slowness. I don't think users think like a 10 millisecond response time is 10x worse than a 1 millisecond response time. So I don't actually think that's going to be like the ultimate Achilles heel. Like, I just feel like DEXs and blockchains will get fast enough, and users like that will not be a differentiation point between centralized and decentralized. I think what will matter is that with the centralized exchange, you're really trusting like this one company, and you're not. There's the obvious sense you're trusting them, which is that you're trusting them with your money, which is a super big sense in which you're trusting them, but you're also trusting them to like kind of continue to innovate. And I think they're good, but like I think there's no way a centralized exchange can compete with like a globally distributed community of builders. And there's like two aspects. There's like the cooperation of just like if you look at Hyperliquid, we do like zero. We have zero idea how to market. We do not have a marketing department. Like it's just like completely organic and community run. And I think the community does an amazing job, like better than the marketing departments of like all these centralized exchanges. That's like what I attribute like Hyperliquid's amazing success to, is like all these users kind of coming together around something that they believe in and really like organically sort of shilling it from the bottom of their hearts, not from like not from like a KOL paycheck, right? So, and it's still so early, right? So like, if you imagine that going from like a niche crypto Twitter thing to like something much more global, like you like cannot compete with that as a central entity. And obviously there's a lot of difficulties with like doing something in a decentralized way, and I think that's why centralized exchanges have been so successful so far, is that you get to basically cut a lot of these corners, or I guess you just kind of like get to not think about a lot of these problems. Like, MEV is one of them, but like other things just like, there's just like a lot of unsolved technical problems. Like how do you coordinate these validators, like do things that still allow for a seamless trading experience, right? And but I think all these can be solved. And it's also like it's like a fun thing to solve. So I think it's like smart people naturally are attracted to hard problems, and we'll solve them all. And so yeah, I would definitely bet on the global financial system being on a decentralized platform, like owned by the people. Just like with all there are a lot of really good points to like the original ethos of DeFi.
Mm. Jeff, maybe we can transition into something like ecosystem design. And one question that like a theme that Monet and I are kind of poking at throughout this entire season is DeFi architectures which lean into more modular design. So we've been talking about this within the context of something like Uni v4, where instead of designing, like this is the v3 instantiation of the protocol, you are trying to attract a whole bunch of different AMM designers, right, within your kind of they've got a little bit of a vertically integrated structure at this point, or something like Morpho. Instead of one, instantiation of a borrow lend pool, you actually have a bunch of different, isolated borrow lend pools. And I think that's what I kind of just heard you say, that a core advantage of DeFi is that instead of relying on, obviously a very competent team that you've built, but you're actually going to leverage the creativity of everyone to build on top of Hyperliquid in general. So can you kind of paint a little bit of a picture for that? What do you think about the idea of kind of building everything in-house in one team versus, kind of trying to attract other people to build things that you guys would never really thought of? How do you think about channeling that creative energy within the Hyperliquid ecosystem?
Yeah, our Hyperliquid has evolved a lot over the 2 years in which it's been growing. And so initially it was, like you said, one team doing something is super efficient. So like, let's just iterate and like just build something that users love. And at this point, it's completely the opposite, which is that our thinking as the core team building, sort of maintaining the protocol, working on like protocol level stuff, is that if something can be built by someone else, it should be built by someone else. And we take this very seriously because we're a super, super small team. So we're actually only 10 people, and that includes technical and non-technical. And we just don't have capacity to like do almost anything. And I think that's that's actually like a blessing in disguise. Basically, if a protocol can be set up in a way that it's like well architected so that people can come in and actually express what they want to express and plug into a permissionless protocol and do it, that's very powerful. Basically, they get to leverage everything that exists underneath and basically just focus on their component of it. I think the flip side here is, like, you can make this mistake by building a protocol too early. And this has happened a lot in crypto as well. I think people get really excited and they see there are these Web2 examples, like platform businesses are the biggest ones, right? So you really need a critical mass of users, and you need to really users and liquidity, I guess, in the case of DeFi, and you need to really abstract away exactly what the builder needs, and that it's hard to know what that is until you have users and sort of like genuine demand. It's a bit of like the chicken and egg problem of markets in general. So Hyperliquid, I think, hit this like inflection point maybe half a year to a year ago, and I think there is just like this critical mass of people who want to do things on it, and that's like really cool as a builder, because I hear this time and time again. It's like builders kind of maybe they were doing stuff on other chains, general purpose, and like come Hyperliquid, and they're like, wow, it's like all these people. It's like, oh, like, alpha, like pre-alpha version of my protocol like launching, and it's like in like 1 hour, it's like the deposit cap I set is hit, and it's like all this kind of, there's just like so much latent demand to like do things, and like people know what the problems are. So also it's not like people are coming in and like trying to create a problem before solving it. It's just like you come to Hyperliquid and there's like all these things left open, like portfolio margin, like why can't I borrow against this asset and trade perps? Well, like it's because a user could build it, and like it's there's like other stuff happening at the protocol level that's more base layer, and so like why shouldn't a user build this? And so like teams coming in and like trying to build that. Many examples across the board.
Jeff, what do you think about, one thing that I find really interesting about Hyperliquid is one of very, very few protocols who've built with this sequence, which is mostly what you see is protocols kind of build as a general purpose type platform. If you look at something like Ethereum, right, the idea is this is incredibly neutral, come build whatever you want here. And that worked when there weren't a lot of options. So kind of Ethereum and Solana both took that approach. What you're seeing from newer L1s is to say, hey, we can't do that anymore. There needs to be we need to solve the cold start problem of there being nothing to do for users once we launch this new competing chain. And so you're starting to see chains like Berachain launch with a native stablecoin and a native DEX, basically so that users have something to do, which was a little bit of a lesson learned from Cosmos maybe. So I'm kind of very curious what you think about this idea of first-party applications versus purely third-party applications and what the right mix is. Because if I had to maybe poke a little bit at the Hyperliquid strategy here is, let's say I'm an app developer and I'm like, hey, this is amazing, right? I'm going to this ecosystem where there's already a huge DEX and tons of users and volume, et cetera. But how can I be sure that Hyperliquid won't roll out what I want to build as a feature, right? Because they have so much power in the ecosystem already. So how do you kind of thread that needle in between, okay, I've got the users and the liquidity, but maybe competing a little bit with application developers who you'd want to build in your ecosystem?
Yeah, it's a good question. So I'm not super familiar with the Parachain rollout, but I assume when you say native DEX, you mean like they built a DEX?
They built the
on
DEX.
Parachain?
Yeah, they built the DEX. Yep.
Yeah, so that's
And a
different
stable
from
coin. Yeah.
yeah, but that's like all sort of like EVM applications, right? Like the team deployed some smart contracts and kind of enshrined them in that way. Yeah, so Hyperliquid is different there. The native side is not like, it's not like the team decided to one day like just put on their application developer hat and like build some applications. It's more like, I think that like what people call native applications on Hyperliquid are, in my mind, more like infrastructure. So I think what Hyperliquid does is it basically, I view it as a general purpose smart, sort of like smart contract platform from the perspective of a builder. It's just that you have all these native things to interact with. Like just like on Ethereum, there's a precompile to, let's say, like compute a hash, right? Like it's a very expensive function. If you wrote this hash function in Solidity, it would take a lot of gas and like you would never use it. But the protocol maintainers were like, you know what, like computing this hash is important enough. Let's just like build a precompile to let people call it and cheaply compute it. So I think the line between like no one says the Ethereum developers like are building applications like what if you wrote a really good hash function in Solidity. It's like no one's like complaining about that, right? It's just like there's some things that like are very clearly infrastructure and like good for builders, and I just think Hyperliquid redefines that or like pushes that boundary a bit to where I think it's like more correct if you're really focusing on DeFi. And so like in my mind, like a Perps, like a very liquid order book Perps exchange where anyone can just like plug in and basically with like almost zero slippage, long, short majors. I think that's just like a public good, and there's no reason like that's not something that's just like so important as a building block that it should be almost like a hash function as like a precompile in Solidity. And like I don't think it's that bad that like a user can't come and build some like AMM version of this like BTC perp and be like, man, like this, I'm competing with the chain. It's just like that's just like not something that users should be building. Users should be like leveraging these like core infrastructure things, like build actually interesting things for end users. And so I don't think there's this like competitive element, and I think we've made it. I think the trajectory has been good. Like basically the stuff that sort of like Hyperliquid Labs works on these days are all trending to be basically like protocolized things, right? Like permissionless perps, like permissionless spot deployments came a lot earlier, but it's all these like, it's like things to enable other people to do things. I'm like, yeah, like someone else could build a protocol on the EVM, of course, but I think that you kind of have to draw the line somewhere. And so the thinking is always like, what is best for builders? And that is, I think that's like very closely aligned to like what's best for the protocol. Going back to my previous point, it's just like you have a global set of like talented developers, and like you should just enable them. And maybe one more thing I should add here is like I think one thing Hyperliquid does super differently from other protocols is like we in designing how the protocol works, like a really high priority is that builders should be able to monetize, basically like participate in upside in a substantial way on what they do. So like spot deployers, for example, can keep up to 100% of the fees collected in the token, in the base token, which is to say like 50% of the total fees on their pair. And like that's something that no exchange, even if it's a central exchange, like they will never offer a team that, right? So that encourages like really high quality innovative assets to deploy natively on Hyperliquid. Perps, same story, obviously not live yet, but like same story there. And I think this theme, like builder codes, like if you build a UI, you can capture like more fees per trade than the protocol captures. Like these are all, I think, things that do move the needle on like building trust with builders and sort of like just making it clear that the protocol is here support you and to basically like we want you to build a billion-dollar business. We don't want to. We're not trying to get in the way. We're trying to like make that possible.
This episode is sponsored by Citrea. Citrea is the first zero-knowledge rollup to enhance the capabilities of Bitcoin blockspace, enabling Bitcoin applications and unlocking Bitcoin's full potential as a programmable financial platform. With Citrea, developers can now tap into Bitcoin's liquidity to build scalable payment systems, privacy solutions, and more. Citrea is currently in its testnet phase and is approaching its mainnet launch. To learn more about Citrea, follow the link in today's show notes.
I'd love to ask like a follow-up on that. I think it's super interesting how the HyperEVM is obviously like a sort of just a very primitive like base layer protocol designed for people to build on top. And it's been really cool to see how HyperCore features like the spot markets, but then also now with builder deployed perps, it's kind of moving towards more of like a platform business take on it. I guess I'd be curious, like, how do you view for builder deployed perps specifically? Do you think that there's like any sort of competitive pressure, maybe implicitly, between markets that are coming from new builders making them versus from the sort of like Hyperliquid core team? And then do you have any ideas about how you're thinking of like maintaining that high quality, unified, coherent UX across not just markets that, we kind of all know are safe because they're from the core team, but also from some of these like more longer tail builder deployed markets?
Yeah, good question. So the intention is not really to have so it is a permissionless protocol, so people can deploy perps on sort of like what they see fit, and it is the protocol is permissionless. So I can't exactly predict what will happen. That being said, the motivation behind it is that basically crypto perps are like such. There are actually like so many innovations that go into Hyperliquid perps today. We're standing on the shoulders of giants. I think like perps themselves are like an amazing innovation, and there are like a lot of other things like but it is super like narrow, and I think the time has kind of come where I think it should be up to builders to come in and say, how can we apply this primitive, this like infrastructure? I view perps as kind of like an infrastructure element. Like what can we build with this infrastructure? So that's kind of the motivation. I don't expect people to just put up like the exact same markets as validator operated perps and say like, hey, like let's just try to compete. It just doesn't really make sense. I think there are like various axes on which people can innovate, but the ultimate goal is for all of finance to be on Hyperliquid. I really think it's transparent, it's 24/7, it's low latency, it's auditable. It's just it has so many things going for it that it really is like it should be like a 10x upgrade on like legacy financial systems. I think there's a long way to get there, but I think these builder deployed perps are a big step in that direction.
I want to, I know we're a little, we got a little bit of time left here, and we got so many more questions still to ask you, Jeff. One theme that we're very interested in this season is this idea of vertical integration. And when you look at a lot of the DEXs in Ethereum or in crypto today, you're starting to see a little bit of that, right? Which is like Uniswap is a really good example of a protocol that started at the AMM layer, and they're kind of going up and down the stack, right, towards the distribution layer of having their own, UI, like desktop UI, and then their own wallet, and then down the stack to their own chain. You can look at like the recent competition between Pump Fun and Radium in Solana as another good example. Jupiter is the same thing. And so, I think especially like UI is super, super critical when it comes to exchanges, which is maybe what is the sort of driving force here. But, I'm curious on your thoughts in general on the idea of vertical integration when it comes to DEXs, whether or not, how Hyperliquid thinks about that, what areas of the stack are the most important for you to have direct control over. And then, you mentioned at the beginning of this episode that, or actually I heard you in, a 0x research episode that I was listening to before this, there's so many things that you need to get right. You need to design the right environment for traders, for market makers, but you also have to get the UI stuff right, which has been a real challenge in the perp space so far, obviously until, you guys have done a really good job on moving the ball forward there. But talk to me about how you think about vertical integration in general, and then UI, right? Like what is important to get right from a trader's perspective here?
Yeah, I think I think vertical integration is obviously super good as like a business decision. Like if you're just like a traditional company, you want to own as much of the stack as possible. I think it's like part of that is just like it's often unclear where the value accrues, but another part of that is just reducing the overhead of, like, if you have like many people you need to rely on to uphold their part of the deal, then your ultimate user experience is only as good as the weakest link in that chain. So, and I think that's also true in crypto, but I think there's a bit more tension in crypto, which is that sort of owning the full stack is also a bit antithetical to, I think, what DeFi should be. Like, I think DeFi is more resilient if there are multiple possible choices at each layer of the stack. And so if any one of them, is compromised or just goes down, or like whatever, like loses, it starts going in the wrong direction and like stops prioritizing the right things, that like ultimately you can find some path through these so like different options at each step. You can like find some path that's like still pretty good. I think that like creates a much more robust financial system. So it kind of depends what you're optimizing for. From Hyperliquid's perspective, I don't think it's like a huge. Basically, like we never even seriously entertained the idea of building everything in finance, and so I think when the vision is that big, it's necessarily built by many people, and I'm very bullish personally on like coordination through protocols, not through like management. It's like you have like a 10,000 person company, you probably build all the finance if like everyone's super good and coordinated and whatever. But like I just feel like I just don't see that happening in the real world. And so like the next best thing is like 10,000 people coordinating across 1,000 companies, like each building their own pieces, and like within a thoughtfully designed protocol to coordinate those efforts. And I think that's where I see Hyperliquid being. And I think it's just like the end state is so massively impactful, and just like there's just like it's just like such a valuable enterprise as a whole, like finance, that I don't think it matters if like Hyperliquid doesn't need to capture all of it. It's just, that's like a super greedy perspective, I think. I think if you're like I'm doing this like one super small segment, then maybe you actually care about squeezing out every last bit of profit for your shareholders or whatever. But when you're building a protocol to power all the finance, I think the perspective is more like it's just like let's just like grow the pie. And if this thing is to succeed, like everyone's going to be like so happy that it doesn't matter.
There's maybe one area of like sort of vertical integration that we've seen across a lot of exchanges that I'd be curious for your take on, which is we've seen a lot of like centralized exchanges try to capture some of the economics from the stablecoin balances that are held on exchange. So Coinbase has this very lucrative distribution agreement with Circle, where they get a lot of the carry. Binance several different times has tried to either partner or kind of like white label their own stablecoin to capture some of that huge amount of like yield that's just latently being generated on all the stables that are on their exchange. And I think that's a really interesting angle, because it's taking money that's completely outside of, it's not like taking from builders or users, it's just taking money from basically the US government and injecting it into your ecosystem. So I'm curious if like Hyperliquid has any, if you have any thoughts about, how to capture some of this economic juice from all the USDC on chain on Hyperliquid, whether that's, agreements with Circle or with Coinbase, or, maybe even having another kind of white labeled stablecoin or something like that.
Yeah, it's not currently something we're working on. I think your question sort of highlights the point that there's just so much low-hanging fruit that like it's kind of hard to believe, but there are like billions of dollars like of stables sitting on Hyperliquid, but up until now the priority has not been that has actually not been the low hanging fruit. Like that's maybe like more than $100 million of yield at this point, but also the protocol makes annualized like about like 5 to 10x that. I don't know the exact details, like not enough data points exactly to extrapolate a year, but I think you get my point, which is like there's just like so many things to do, and I think it'll be cool eventually for the protocol / users to be able to have all sorts of benefits, right? And I think this is what happens when all of finance moves onto one chain. Is you get to kind of if that chain is designed thoughtfully and not greedily, like not as a sort of company maximizing extraction, but rather a company maximizing just cool shit that can be done, then I think all this stuff becomes possible.
Okay, Jeff, we're nearing the end of our time here, so maybe closing question, and building on the question that Monet just asked. I'm curious what you think about the role of stablecoins versus the role of Hype, the token, in your ecosystem design. And specifically, I think Hyperliquid is a really interesting example here, where even if you look at something like Ethereum, like the way that they thought of value accrual for ETH, the asset, was that it was going to be used as this store of value or medium of exchange kind of money. And in the early days, you saw a lot of, even still today, right? If you trade NFTs, it's typically NFTs are denominated in something like Ethereum. But a lot of the early use cases for something like Uniswap is the pair was ETH, right? In a lot of these AMMs, like V1. And gradually that's kind of moved over time or shifted over time towards more dollar denominated trading pairs on L2s, especially as they kind of try to go out and get new customers from the world who mostly hold dollars instead of something like ETH. And so it's interesting, Hyperliquid maybe developed in reverse order than a lot of exchanges on places like Ethereum or Solana, right? Where you started from day one with USDC and dollars at the core, right? Because that's what your customers wanted. But now you also have a token Hype, right? And it seems like the way that you think about value accrual there is buybacks. But I'm just curious how you think about this. Like, have you ever thought about like making Hype kind of more of a trading pair or a core part of the ecosystem? Or how do you, kind of balance this desire for customers to trade with basically dollars versus value accrual for Hype?
Yeah, I think the money thesis of a native asset is probably not something you can force. So I don't think you can, as a team, you can go and say, you know what, like, I think I'm going to build money. And like, it's just like, the money is like one of the most elusive things in the world. It's humanity's, I think, like one of greatest inventions. It's like the greatest coordination invention. And I think it was like the source of a lot of human progress, but also it's not something you can directly build. You can build it kind of by building a country. It's like the US did a super good job, right? Like the US, like the dollar is a super good product. Or you can build it like Bitcoin, like Satoshi kind of did, which is, let's just build some interesting tech. And this technology is like so groundbreaking that maybe you have a chance to create something that's like money. But otherwise, I don't know. I mean, I think Hype will be money if all of finance moves on to Hyperliquid. But yeah, we're kind of focused on the latter because that's actionable. And so I think that trading against Hype, like, I don't know. I think people talk about it a lot, but I think genuinely like people think in dollars in crypto at least. But I think broadly around the world, like people kind of prefer to denominate in dollars. And I don't think that's like if you say like if you come on this platform you're trading in Hype, then I think probably what happens is people stop going to the platform. So it's not, and I think it's like ultimately it's kind of what people want. So I think the sort of like technologically they're both assets on this decentralized ledger, and I guess time will tell.
All right, Jeff, we could go for another hour here, but you've already been super generous with your time, and I know we got to wind it down. This was great, man. Thank you for coming on the podcast. If folks want to find out more about Hyperliquid or follow you or just keep updated with the work that you're doing, what's the best way to do that?
Yeah, there's a Hyperliquid Twitter you can follow at HyperliquidX, and I'm at chameleon_Jeff.
Okay, this is the real alpha. Why Chameleon Jeff? I love to ask people with interesting Twitter handles. What's the alpha behind that?
I think they're really cool animals. So I don't know how well known this is, but they're just like so interesting. They're like they're one of the only animals where their eyes can point in different directions, like independently controlled, and I think they're one of the only lizards that have like 2 claws forward and 3 claws back, which shows like a very interesting like evolutionary trajectory. And they also have like a really powerful tongue, which is like pretty cool. Yeah, it's just like, and they change colors, obviously. I mean, that's the well-known thing. So yeah, I think just like I've always been really fascinated by them. They're kind of like aliens on Earth. So yeah, that's it. Nothing more than just respect for the animal.
So, listeners of Bell Curve, this is why you got to stick around to the end of the episode always, because you thought you were getting an interview on Hyperliquid here, but you're also going to learn about Chameleon. So that's why you got to stick around. Jeff, this has been really fun, man. Thank you so much for coming on the show. We'll have to do it again sometime soon.
Yeah, thanks for having me. It was a fun conversation.
Cheers.
Thank you.
All right, Monet. What an interview, man. I can see why everyone's so hype on Hyperliquid. That was great.
Yeah, no, that was fun. Definitely got a little more bulled up after hearing Jeff.
Same. Yeah, I mean, I thought, it was interesting. We kind of went into this interview and I was very focused on at least kind of vertical integration and not thinking about some of the other themes of the season, but it felt like we ended up talking a lot about this kind of idea of modular design and fragmentation. And it seems like Jeff is highly focused on leveraging not just the creativity of his team, which has done very well executing on the vision thus far, but also leveraging the collective creativity and builder and entrepreneurial talent of crypto. And it's kind of interesting. They've approached Hyperliquid from the exact opposite direction of more general purpose platforms like Ethereum or Solana. And they've kind of started with the monetization and the product which generates the fees, and now they're trying to bootstrap the ecosystem around it, as opposed to some of the earlier smart contract platform, which really started with the ecosystem and the community, and then encouraged them to build a bunch of ideas. And so I'm curious, when you think about that approach, how do you weigh the pros and cons of the way that Hyperliquid is going about it versus a more general smart contracting platform like Solana or Ethereum?
Yeah, I mean, I think you mentioned in the show like that's Ethereum and Solana to another extent. Like they had the luxury of being early, so um, they could just kind of build it, and the builders will come and build on them because there weren't a wealth of other opportunities. But I think that in a way, Hyperliquid they were very smart because they recognized you can't just launch an ecosystem or a platform from day one. There needs to be a hook to acquire users, and their perps markets I think have been that hook. And it also gives the platform like some really solid economics to get people excited about from the start. Um, but I think it's going to be very interesting because it feels they're still quite early in sort of transitioning from really a product focus, just having the best perps exchange that you can in DeFi, to more of a platform focus, being somewhere that builders can come and make their vision happen. So I think there's still seems like Jeff was like really he had an eye to all of these challenges that you have, the tensions between those, but it's still very early in that process. So it's tough to see if um, they've run into these challenges yet.
Yeah, I think that Hyperliquid actually was way ahead of its time in figuring this, and that's actually the trend that I think you see in not only mostly new L2s in general, but also new L1s that are launching. They're saying, hey, it's a completely different market structure than it used to be when Ethereum and Solana launched, and that's everyone from Berachain launching with their own DEX to Honey, their own native stablecoin. That's new platforms like the mega ETHs of the world, where it's not just like, hey, everyone, they're very concentrated accelerator programs where they're maybe kingmaking is too strong of a word, but they're really putting their resources behind a couple of very high quality teams. And so you're seeing different iterations on this. And I think this idea of first versus third party apps is going to be a huge topic when it comes to ecosystem design in general. And I think that Hyperliquid basically absolutely nailed the meta, and they were way ahead of their time. Then I think the rub is it's ultimately going to come down to that question that we were kind of asking. And I thought you had a very interesting question to ask, which is one, there's Hyperliquid's probably going to have to reassure its complements that it's not going to try to compete with them, right? So, okay, there's hundreds of millions of dollars of fees which are being generated from stablecoins. Like, is Hyperliquid going to try to take those, or is it going to let someone else build? And so I think maybe it has to demonstrate that it's willing to let builders come in and take money on the floor. That's just kind of sitting out there on the floor. And then also, I thought you had a really interesting question around how do you ensure the standards of third-party app developers, right? This was actually a challenge for the App Store in the early days, and why Apple, it'd be interesting to go back and look at Apple's first party versus third party app strategy, because in the beginning it was a little bit more permissionless, and then it's like, whoa, there are a lot of apps in here which are not creating a great user experience, and I'm getting complaints from users that when I download this third party app that I'm getting scammed or it's a bad UX, and so they got much more stringent around standards. And so it'll be interesting to see whether or not Hyperliquid goes from a more, hey, anyone can sort of build here, to a more prescriptive approach in terms of basically just generating a good unified user experience.
Yeah, I think it's really interesting you mentioned that, because I think they're like kind of doing both of those at once, like two different strategies. So the HyperEVM, fully permissionless to deploy, at least for now. Maybe they'll change that in the future, but um, it's just permissionless. And then for their builder deployed perps, which are still on testnet, but expected like soon, I think, um, there's like this big um, staking requirement. So you're putting up some capital to secure the market. And then you also have to like bid to essentially like have the right to make a market. Um, so I think it's interesting that they're kind of doing a more curated approach for some of these like HyperCore features like the perps markets, but then also doing the permissionless. And um, I think there's still going to be some challenges that you see with this platform model, even with the more curated ones. Like I know Jeff said, like, okay, I don't expect people to be launching, another Bitcoin perp market that competes directly with the ones that already exist. But what if, a builder deploys some new long tail market that ends up becoming very popular? Um, is that something that like the sort of core markets are going to try and compete with? Are there going to be several builders who are all chasing after the same market? Um, how do you deal with the sort of like fragmentation in liquidity, but also just in kind of mind share and user experience? So I think there's going to be a lot of interesting challenges when the rubber meets the road on this.
Yeah, it's going to be fascinating to watch their approach to that. And when we were discussing ecosystem design as well, I think that the question of stablecoins is probably the most interesting one, because as you pointed out, yeah, USDC actually is a huge source of revenue for Coinbase, through the rev share that they get with the Center Consortium and Circle. And so this will be and actually a huge distribution strategy in general for stablecoins is leveraging an exchange. So it'll be interesting to see what happens when a native stablecoin comes to Hyperliquid, which I'm sure is probably inevitable, right? Is this something that Hyperliquid is going to try to take a rake on in the same way that Coinbase does, or whatever? It'll just be interesting to see how that ends up playing out. But the other thing that I thought was interesting was talking about just ecosystem design around Hype, the token, and dollar assets as a trading pair. And I thought I I largely agree with Jeff here, and I think that the division that they have is super interesting. So, I've had this has been a core question of the rollup centric roadmap in ETH, and it's now increasingly coming up within Solana as well, which is what is the rollup Sol, the token. But the question there being, okay, there's a little bit of a tension here because we wanted to ship ETH up to L2s where it was going to be used as a trading pair, and that created a lot of the buy pressure for ETH in the early days, but L2s are like, hey, I want to go out and attract new users, and they want to hold dollars and trade with dollars as a trading pair. And that's obviously how Hyperliquid started. And so their solution to that was, well, we do have an exchange which is generating a ton of fees, so we're going to do buybacks. And so that was kind of like the burn mechanism as a value accrual method for ETH in the early days. So it was interesting to hear him stratify kind of the difference in between how he thinks about dollars in the ecosystem versus the role of hype, the token. But I'd be curious what you thought about that, and whether or not we can extrapolate that kind of clean division in between, across, like the Ethereums or the Solanas or the L2s of the world as well.
Yeah, I thought he was dead on about when we were talking about like, is your token money? Um, and Jeff said you can't build for money. It's just not actionable. So he was like, you know what, we're just going to focus on shipping the best experiences, the best like products and platform that we can. And I think that um, yeah, it feels like Ethereum maybe has gotten too focused on ETH's money. Like, I own a lot of this. I hope it becomes money at some point, but it's really not super actionable. So I think that was like a really refreshing and kind of like the right viewpoint to have. Um, One thing that I think is really quite different from ETH or Solana, and I'm not sure it's really replicatable from these just more general purpose chains, is that um, Hyperliquid has this sort of like native app side of things. They have the
Yeah.
HyperCore Perps, where you can stake to get reductions in trading fees, or you can stake to be able to deploy a perp as the builder deployed perp market. Um, and you even need to bid in Hype to be able to like sort of like win the right to deploy a perp market. Um, and I'm sure there's going to be more of these in the future as well. So the native apps, not only it's like another revenue stream to like kind of pre-fund their buybacks, but they can also kind of attach more interesting utility to the token beyond just staking to secure the network. It's almost like they have like restaking built into the core functionality of like the HyperCore platform. So I think that's super interesting. And um, Solana and Ethereum, they have a lot of restaking developments happening. So potentially some of these other utilities are going to be happening, but it'll be from sort of the outside in of people sort of adding on these utilities. And it's not really clear to me yet whether ETH is going to be the preferred collateral for restaking, or whether it will again be something that gets won by stablecoins or T-bills.
Yeah. It's really interesting that you bring that up. And, this was maybe a poorly worded question by me in the beginning, but I never really questioned this before. It's like, why didn't they just ship as an L2? And I think if you were cynical, you might say, hey, this is trying to capture this idea of the L1 premium. But I walked away from this conversation thinking that was not the case at all. And I agree with Jeff's take, which is a simple take in MEV land. And I think the simple takes, especially when it comes to MEV, are the best, which is this is an engineering problem and we can mostly solve this problem. And I would we'll link the paper that he was referring to, which was, I believe, Max Resnick and Anatoly's blog post from the weekend over with multiple concurrent proposers, and how that could, you could have a very distributed but also very low latency ecosystem. And I agree with him. I think you have to make a little bit of trade-offs, but you can solve that problem. But I came away thinking they were very intentional about the design of Hyperliquid as an L1. And they were also very focused on giving users guarantees that you could not get with other centralized exchanges. And it was interesting a couple of times that he phrased having a very liquid perps market almost as a public good or utility. It's like liquidity as a utility that others can use to build on top of is a super interesting idea. And I think that makes a lot of sense very pragmatically from a, hey, I want to build in this ecosystem. What can I build on top of? There's kind of this idea of a liquidity layer, which Uniswap wants to be, Sky and Spark. Spark wants to be. There's a lot of Lido is designing this liquidity layer as well. Everyone kind of wants to be that. But I think kind of using, a unit of liquidity as a resource for builders to build on, and the L1 design underneath it, I thought was pretty cool.
It's
Yeah.
super cool. I think it's maybe it's still not appreciated enough yet, though, that like a lot of the core, maybe like winners on EVM chains and all chains so far, it's been these DeFi apps that are kind of building the liquidity primitives. Lending markets, lending pools like Aave, AMMs like Uniswap and Curve. They've been kind of like the core success stories of DeFi so far, and I think they've kind of succeeded because there have not been performant order books and there haven't been performant perp markets, which are like kind of users' preferred ways of trading and levering up on chain yet. So if these are being provided as a public good, it's like a challenge because you can't just copy paste the same models that have worked on other chains. Maybe you can to some extent, but you're going to have to adapt to the fact that um, this core app is providing a lot of the functionality that has been forcing users into these other primitives so far. Um, but then maybe it's a benefit too, because if people can actually start to think a little bit different and take some more risks, build something new, um, and not just focus on the same primitives that we already kind of know work because they have revenue and TVL and such, but like um, they're not as exciting anymore. They're not really breaking new ground.
Yeah, I agree. I think one thing that we didn't really get to touch on, which maybe we'll have to have Jeff back on at some point, but was the idea of the intersection of RWAs and some more like the incumbent competition, right? So obviously you have sexes like Coinbase and Binance within crypto, but you also have stock trading platforms like Robinhood that are moving deeper into crypto as a space. And I think that obviously the exchange layer is super competitive, not only in TradFi but also in crypto. And so it'd be interesting to think about the competitive advantage that something a chain like Hyperliquid has versus those incumbents. And the last question that I wish we had gotten to talk about a little bit is the go to market and customer acquisition strategy, which frankly, I would be surprised if you would reveal that on an interview anyway. But this is what I've managed to piece together looking at a couple of exchanges come up, and I'm curious to get your take on this. But it seems like every exchange innovates on how fast they can offer tradings or different assets and list them. And then eventually it morphs into something else. So the example is like Binance in 2017, they just kind of listed everything, right? And then they buttoned up and then they started to compete on, the big trading pairs where all the liquidity is. Very similar thing with FTX. And I don't know if we're far out enough from FTX where we can, say good things about them. Obviously, bad exchange, don't like SBF, they stole customer money, not absolving that story at all. But they obviously did have a good product at the time that a lot of people liked. And one of the things that I remember them doing is they would just get perp markets up faster than everyone else. And they would innovate on, they kind of did early innovation on prediction markets, like with that Trump kind of yes, no, that's this binary structure on betting on Trump versus I think Biden at the time. And they had pre-token trading markets and that type of stuff. And Hyperliquid innovated a little bit with HLP, where it was kind of this pot where users could dump their money and they would act as a market maker for basically any trading pair. And that was a huge part of the strategy for how they won market share in the beginning. And so it seems like their strategy after this is to build out more financial services and become a chain, which is a big departure from what other exchanges have opted to do. And so, yeah, I'm just rambling here a little bit, but I don't know if that's also your kind of looking at it from the outside perspective on how exchanges have chosen to go to market. But I'm interested to see basically what comes next for Hyperliquid here.
Yeah, I think it's to like sort of at a high level, the way that I'm looking at it at that is like kind of finding the niche in the market where your competitors are
Yeah.
not able to serve as well as you can as like a agile upstart or for other structural reasons. So I think Hype, they listed stuff super fast because they're just like a super small team. They're hungrier than these big 1,000-person exchanges, and they just got it done. Um, they also are a decentralized platform. So people who want to trade in a permissionless environment or just trade from their wallet and not have to make an account with an exchange, that's something that you can only do in a decentralized platform. You can't do that on Binance. Um, so I think that that's another edge that they've had. Um, but yeah, I think they're they're probably approaching maxing out like those edges. Like everyone who just really wants to trade in a DeFi environment, and that's the reason that they're trading there. They're probably starting to get most of those users get kind of saturated. So I think the next thing is going to be, figuring out what value can you get from this atomic DeFi composability between the Perps and HyperEVM. I think we're still super early in seeing what useful products are there, but I think it's a very interesting design space, and I do think we'll see some really interesting products coming out. And then, potentially like, um, is there like an institutional pitch to say you can self-custody and maybe that reduces your risk when you're trading, or like, some other unique features that Hype can provide that others can't. Um, so yeah, I'm super curious what's going to be their next edge that they really lean into.
Yeah, I think that actually a structural advantage of dexes over sexes in general is that the long tail is actually much longer and much more important than people thought it was going to be. And I remember a couple of months ago, Brian Armstrong of Coinbase came out and said, hey, we need to rethink what our listing process is going to be because we're overwhelmed here. And I know Binance actually is a little bit sensitive. There was when meme coins were a thing, it was actually, obviously the sex listing is still very important and they have a lot of leverage, but you kind of saw for the first time actually sex liquidity was kind of the exit liquidity, and kind of you would already have most of the price appreciation on a DEX environment before it graduated to sex counterparts. So yeah, I think that, and this really depends on your view of meme coins and assets in general in crypto, right? Some people view that as very fluffy and very ephemeral and not going to last. My own personal perspective on this, to editorialize a little bit, that is the beginning of a long trend, and I think you're going to see more like the volume of new assets getting issued on chain go up and up and up. And I think actually a key feature of dexes in general is that it's much easier to quote unquote list. Doesn't mean every asset's going to go up. Doesn't mean we're going to get a 10-year meme coin super cycle. That's not what I'm saying. I'm just saying that I think the volume of assets coming to market is going to be much higher, and it's a structural advantage for a decentralized over a centralized environment. So I think we didn't really talk about that on the episode, but I do think that's one advantage that dexes have over their centralized account. And you can see that we'll show the chart after this, but there's a DEX versus SEX, percentage of trades, and it's been creeping up and to the right, which is also cool and something that I think we want to see in crypto.
Yeah, I think they are leaning into that a bit too. Like, there's nowhere else where, well, other than, DEXs in Ethereum and Solana and such, but in uh, sort of a product experience like you expect from a centralized exchange, a high performance order book and perps market, there's nowhere else that you can do permissionless listings. So, um, yeah, I think, it's clearly definitely a core part of their strategy, and going to be really interesting to see how that develops.
I agree. All right, my man, this was really fun. To tease some of our next episodes, so we talked about stable coins a little bit in this episode. We're just at the end there getting into borrow lend. So the next couple episodes, we're going to be hearing from pioneers in both of those spaces as we kind of move through the major use cases of DeFi today. So yeah, this was a really fun one, and yeah, I'll see you here next week.
Yep, see ya. Can't wait.
Cheers.